everyone, welcome. You're watching Closing Trades on ET Now. I am Anisha Jain, with me Saisha Faridi as well as Avan Dubash. And for the market, it does look like we are losing as far as the market is concerned. The steam that we saw at the start of the trading session when we were very close to that 18,000 mark has been let up completely. In fact, at this point of time, we are not only at the lowest point of the trading session, but we are heading fast towards breaking that 17,800 mark. So a definite weakness. As far as the Indian market is concerned, the mid-cap index was faring better throughout the trading session, but that too is coming under pressure at the moment, and that's the lone ranger that's actually managing to stay slightly in the green. It's Nifty Bank again, which is the pressure point. That index is down considerably in the trading session, almost 250 points lower the last time I checked. Pharma too hasn't been doing well. It's actually hit a 7-month low intraday. And in fact, all sectoral indices barring IT and auto are on the back foot today. So it's only Motherson Sumi which is reacting to the acquisition news flow and the TVS Motor Sona Comstar stocks. And some of the IT mid-cap names, the likes of Persistent, Coforge, LTTS, Zentech, Zensatech, etc. Some of the names which are doing well. But other than that, I have to say, Aisha, One, that today, it's not a very good day for the bulls, at least.
It's not, considering that, tonight there will be no US Qs as well to hold on to. And the fact that, we were unable to hold on to that 18K mark just last week, gave that up on Friday, and then from there we're drifting even further. 17,828 is where we're currently at. Adani Enterprises down 6.5%. Cipla is cracking quite hard. It's down 6% as we speak. The Pithampur facility has received 8 observations under Form 483. They yet to respond to the observations within the stipulated period. And the Goa plant, also remember, is currently under the warning letter. So quite a few of those, headwinds currently weighing in on what we're seeing right now on Cipla. Having said that, what's buzzing on the other hand is the entire auto ancillary pack. Anisha was just highlighting that, be it Motherson, Lumax, Minda, they're all holding a buzz. There you go, Lumax now up 11.5% as we speak. Minda, of course, has given up its morning gains, but a 2.5% gain coming in even for some Vardhana Motherson. That stock also is holding out. Also, some of these FTSE semi-annual REIT contenders are the ones which are seeing action both on the positive as well as the negative side. IDBI Bank, for instance, it's set for an inclusion for the global large cap index. That stock started off the day higher by about 2%. Right now as well, it's looking up in the green. The exclusions include the likes of a Biocon, Piramal Enterprises. Inclusions are also the likes of Sona BLW Precision, Patanjali Foods. Inclusions also include some of the smaller ones like a Kalyan Jewelers, Triveni Turbine, Go Fashion, Serra Sanitary Ware, Alcargo Logistics. These are all also names which are up for to be included in that list. But that said, Avan, let's welcome on board our chartist and find out what next for the indexes.
Absolutely. We've got Kunal Bothra, as always, in our studios, as well as Naresh Mirani. And Kunal, we're talking about that struggle around the 18K mark. That's long gone now. Even 17,900 is a struggle.
Yeah, 17,800 is the pivot. We were expecting the markets to fluctuate and come closer to this 17,800 mark. So I think we managed to close below the 17,800 mark is where we would probably shift our stance from being on the slight positive bias towards the indices towards maybe neutral or on the negative side. But I would still expect the index to remain into a range. Yes, the banking index is showing signs of weakness, and that's one of the prominent indices which has underperformed. But then on the other hand, you have IT index, you have many large cap auto names. They're still showing signs of strength. Chemical stocks have made a comeback. So there are a few sectors which are still showing signs of strength. It's just the persistent selling on the banking index. Maybe it could be the expiry week phenomena, which could probably be shaping up for the banking index. But nevertheless, I think till the time we hold up about the 17,800 mark on the spot Nifty, we would probably expect the buyers to be on the bullish side.
All right, let's also get in Naresh Mirani's take. And Naresh, we're taking a look at the list of losers, and it's an extensive list across the board, be it the likes of Cipla, Kotak Bank, HDFC, Axis Bank, all weighing heavy. What's your sense in terms of the damage that we're seeing take place on the frontline index, and in particular the large cap stocks?
So we are continuing to see every day one or the other sector do well and do bad, and we continue to drift lower from after making that move above 18,000. We are back to 17,800, right in the middle of the range. So banking is taking the larger hit. It's affected the most. And out here, say a lot of these names like ICICI Bank, etc., have done quite a correction already from the top. So right now we are back into the range. Nothing can be made out of it. If we start breaking below 17,800, we can test the lower end of 17,600. But overall, between the 17,600 to 18,000 band, there is not much to do from the index perspective. One has to look at specific stocks. But it's been a market where there is no clear trend as such.
Right, okay. Let's also welcome on board then Vinit Balenchkar and find out what he's making of the current market texture right now. Vinit, does it seem like looking at the market that there could be an impending fall?
Call it an impending fall, but I believe that there is a sector rotation that is taking place, and I believe that the auto sector will do very well, given the fact that you have the Inflation Reduction Act in the US, accelerated move towards climate change products, and mirroring of these benefits that are provided by the US in the eurozone. So what is going to happen is that the acceleration in the adoption of EVs is going to happen. And I believe that today also Uber has placed orders for 25,000 EVs with Tata Motors. So I believe that the EV traction is going to take place, and this is definitely going to benefit the auto and the auto ancillaries, especially those who have got their portfolios focused more on the EV space. Additionally, if we build in the outcome of a scrappage policy, even if 10% of the vehicles start getting scrapped, then we will see a fairly decent secular volume growth happen over the next few years, and hence we tend to be biased towards the autos, in particular, as far as the market large caps are concerned.
Okay, so quite positive when it comes to the auto space. But Vineet, I'm intrigued to ask you your positioning when it comes to the cement stocks, because since that announcement of 15 rupee hike has come to the forefront, that sector rather has been on a re-rating trend. Today as well, Shree Cement is doing well, Ultratech Cement is piling on to more gains, and even the smaller names like Ramco, JK, etc. are doing quite a bit of move today. Your take on the cement pack?
Quite bullish on that space too, given the government's overlays into the infrastructure segment. I think 10 lakh crores of announcements is very, very positive. Add to this the domestic manufacturing which is picking up. Capex on the private sector also is booming. So I believe that the cement as well as the steel pack should do relatively better compared to the market.
Okay, that's the take coming in on cement. Let's just quickly, map some of the buzzers in trade. And cement clearly for a second consecutive day is holding out very smartly. So Shree Cement today is the one which is at the top of the pack. But having said that, it's a bit of a mixed bag out there. So Motherson is looking good. Voltas is holding out. You've got Persistent, which is up 3%. And then there is a Divi's Lab, which is up 2.5%. And from within the same pharma space, a rank underperformer is Cipla, for instance, 6.5% lower there. Delta Corp, Idea, NMDC, they continue to be laggards, as do the Adani names. And today, Adani Enterprises is down a good 6.5% as we speak right now. But Kunal, does it seem like this underperformance in banks, which is taking place today, could perhaps drag a little further?
Well, it's difficult to say because, there are no major large cap gashes or stocks on the large cap front which are actually seeing a sharp correction. I think the best or the worst performer so far, I think is SBI, which is down some 1.5%. You look at the contribution plate, HDFC Bank is the one which is contributing the heaviest on the downside from the composition of Bank Nifty, and then followed by the likes of ICICI Bank, SBI. But then, as I said, that the percentage fall for these stocks is not anything which is more dramatic for these names. So I believe that this could be more of a par for course, where the selling is more inclined towards the banking index futures rather than the stock specific ones. The other point is that the put call ratio for the Bank Nifty on this expiry, for the monthly expiry, which is again a prominent expiry, has come back towards 0.45, 0.46, which means it's at an extremely oversold territory. So even on the put call ratio front, there could be a stronger possibility of a bounce from here on, at least a 200 to 400 point bounce for the Bank Nifty. So I would believe that possibly that the selling may stop for the Bank Nifty, at least as of now, and possibly till tomorrow we may expect a 200 to 400 point revival.
Okay, meantime, let's also run you through some of the interesting volume buzzers in today's trading session then. And Shree Cements catches one's eye. You've got that stock which is seeing higher highs and higher lows for the 6th straight session. So 7 straight days of the stock is a buzz, and as we speak, it's currently quoting higher by about 3%. Moving on, there's Happiest Minds as well, and after 15 straight days of consolidation, finally seeing a decisive move on the upside. It surpassed its 50 daily moving average as well, and that stuck clutching on to the 900 mark in today's trade. Sumitomo Chemicals as well is a buzz in trade, volumes at over 11 times the last 20-day average, and it's surpassed its 50 and its 200 daily moving average, seeing its biggest single-day gain since June 2nd, 2021, and that stock is seeing a double-digit gain in today's trading session. Let's get in a view then, Kunal, as to what your outlook is on some of these buzzers in trade, Sumitomo, Shree Cements or Happiest Minds.
So Shree Cement, I've been bullish on. I think the last couple of days I had indicated a buy with a target of 26,500. Those levels have been met. For Sumitomo Chemicals, I would probably still wait out for maybe another day. So, in this kind of a market, we are seeing just 1 or 2 days of strong price action move where the volumes shoot up higher, but then there is lack of follow through. So these prices, they don't get lifted off to a higher level of range. The range still gets continued for these stocks even after stronger price action days. So I think that's the biggest concern for the market. So I would probably wait out for maybe 1 or 2 days for Sumitomo Chemicals. But then from the chemical space, the other 2 names which have actually started to spring up and look very attractive from the F&O space, specifically the likes of Naveen Fluorine as well as SRF. I think both these stocks have established a major support, major bottom for themselves. Naveen Fluorine, I think, has come back above its 200 DMA. Volumes have been very attractive over the last 1 month particularly. SRF also, I think, has made a good base at 2,100, 150 mark and moved up higher by almost 150 odd rupees. So these are the other 2 names which I would be probably bullish on.
Right, Kunal, in that same breath, some closing strategies as well.
So I would go with 2 buy calls. One is on Tata Motors. I would suggest a buy. I think the stock looks very attractive. 420 seems to be a very strong and formidable base. So that's a stock which I would look to trade.
All right, Naresh, let's get in your closing call.
So, adding on to Wipro Limited, the stock has not seen as much of a recovery compared to the rest of the IT names. The risk reward seems the best placed here with a stop loss at 400, could go up to 440. So, Wipro is the one which I add, and looking to add more about 412, 450 levels.
From that, Wipro has seen a bit of a catch-up play at work, but other than that, a lot of these mid-cap IT names are doing quite well. Sonata Software, for instance, is up around 9%. Happiest Minds, we just pointed out, was up around 6%. You also have Persistent Systems, which, if you look at the YTD chart, has gained as much as 25, 27%, and then Mastech Limited, etc., are also something which are inching higher. Vineet, your take as far as the entire IT pack is concerned, and is there a top bet in the mid-cap IT specifically?
So, we continue to remain underweight on IT stocks. I know that there is a little bit of buying happening given the defensive nature of this pack, but I believe that the US market is going to come in for a lot of jitters, and internationally investments are also slowing down. So we continue to remain negative on the IT pack.
Okay, so that's the take coming in as far as the IT pack is concerned. Still a bit of an avoid at this point of time. But it's time now to slip into a very short break. As we do that, we leave you with this exclusive snippet of a conversation that my colleague Ajay had with none other than Mr. Rupini.
Well, I'm quite positive about India. I think there is a good chance that India is going to be the most important country in the world over the medium long term. You have a population that's the largest in the world, young and growing, 1.4 billion people. So that can, with good education and skills, lead to strong economic growth. Secondly, there's going to be a catch-up of growth. The growth per capita of India is only 1/4 of that of China. With the right policy, growth can be potentially above 7%, and that's going to lead you to become a very strong economic power. And finally, the country is also going to become a major geopolitical power, both in Asia and globally, given its size, its role, and the fact that, you need a strong power to manage the relation also with a rising China.
Welcome back. Flat as ever when it comes to the broader markets, and for now we're staring at a cut of 0.5%, close to the lowest point of the trading day for the frontliners. Do remember the US markets are closed tonight, so we won't be really getting any cues. Within the broader universe, Shilpa Medicare, Cipla, Adani Enterprises, as well as the entire cluster of Adani stocks. Add to that list Spark, Delta Corp and Piramal Enterprises. They're under pressure in today's trading session. On the flip side, you've got Sonata Software gaining traction. Bharat Dynamics is a buzz. Web of Global in the green, Serra, Persistence, along with something like a Fine Organics. Those are stocks that are a buzz in today's trading session. Well, wanted to get in your thoughts then, Vineet, on this new acquisition that we've seen from Samvardhan Motherson. Any comments as to how you expect things to pan out?
As far as Motherson is concerned, uh, we are of the opinion that the company needs to get into the free cash flow positive generation mode. Every time the company gets into uh, you know, is about to get into a positive cash flow generation mode, they go and do an acquisition. And because of this, we are not very comfortable with the stock as such.
Is also Cummins India that interacted with us in today's trading session, and they were talking about how the company is pretty confident as well of continuing the growth going down the line. They said that they are looking at a strong order backlog as well, and they are seeing improvement in some of the supply chain issues. Vineet, your outlook as to where your preference would lie within this space?
We would go with Sona Comstar. I believe that they have got a very good, uh, you know, per vehicle contribution from the global markets. We believe that the global markets are on accelerated pace as far as EV adoption is concerned. And considering the fact that the softening inflation is done with, and the raw material costs are coming off, we believe that the margins can spring back for Sona Comstar.
Talking about Sona Comstar, let's just talk about why the auto ancillary space is a buzz, because the global supply chain issues clearly seem to be removing. Remember, till about a year back, this was a big bottleneck, and that seems to be easing off now. India, of course, remains a very strong export market for auto angs, and the China Plus One strategy, as well as the EV demand, is definitely auguring well for the entire auto ancillary universe. We just highlighted the acquisition by Samvardhana Motherson Sumi. That for 450 or rather 540 million euros, that's something that the street is taking cognizance of. The transaction is going to be funded by a mix of debt and internal accruals, and it's going to be expected to complete by the second quarter of FY24. Prima facie, this is going to add about 10 to 15% to their revenues as well as EBITDA. So in that sense, the street is excited definitely about that. Minda Corp as well, which has acquired about 15.7% stake in pre-call. This was as of last week, 400 crore rupees as a financial investment. The business update on the con call is yet to take place. That's going to be at 5 p.m. today. And then, of course, there's Lumax Auto as well, which is looking to acquire 75% stake in IAC Group's India business for 587 crore rupees. The deal is at an EV per sales of 1.1 times, which is on a FY23 calculated basis. So, the entire space is clearly a buzz. But Kunal, Auto Angs once again, jumping back. Today, of course, it's all these deals which are sort of a buzz and keeping the space a buzz. So, Samvardhana Motherson, Lumax, Minda Corp, Vinit was just talking about Sona BLW as well. And these stocks have gone through a very long period of consolidation as well. What next do you read on the charts?
Yeah, so at the start I was saying that auto and IT, these are the only two sectors where there is strong trend. And auto stocks, in fact, for a change, it's not the larger cap names, the likes of M&M, etc., which are leading. It's the auto ang stocks which are actually showing a lot of follow-through price action. Many of the auto ang stocks have actually given breakouts of multi-month, weeks of consolidation. Even for example, Samvardhana Motherson, the stock has broken past above its 200 DMA, broken past above that levels of 80, and I think if I'm not wrong, it's also at a multi-month high for itself. So that's the kind of the trend and the follow through price action which we look out for when there is a sector move at play. And I think as of now, from the larger cap names, It's just the likes of M&M and Tata Motors, which are still looking very attractive from the auto pack. But from the auto bank space, there are a lot of stocks, a lot of options to choose from. Just like Samvardhan Motherson, there is also an Atul Auto, which is also given a breakout of a 3-year consolidation.
Okay, staying with this cluster of stocks, let's understand the buzz within this entire space. And Sharad is here to give us the details. Sharad?
Well, yes, a lot of mergers and acquisitions are taking place across the auto ancillary space, but let's look at the key triggers coming in for the auto ancillary space. This includes an improvement in the global supply chain, and India has a strong position for giving out export orders. Apart from this, of course, the China Plus One strategy and the EV outlook plays out for the Indian companies. Now, let's look at the important mergers and acquisitions taking place over the last 2 days. And of course, key acquisitions coming in is from Samil, where they will be acquiring 100% stake in SAS Auto Systematic. This is coming in for almost 540 million euros. Now the street is expecting that the deal would come between the range of 5.3 to 5.4 times of the EV EBITDA multiple, and it has come slightly on a premium basis. Apart from this, looking at the transaction, it will be funded by debt and internal accruals and expected to be completed by the second quarter of FY24 itself. And the management also stated to ET now that after the acquisition itself, the net debt to EBITDA levels will be still below the 2% mark. And the most important thing is the company will be moving closer to their customers and also their large customer from the US for the EV space. Apart from this, Lumax Auto Tech would be also in focus, almost a 1600 crore odd market cap company. But the deal is to acquire 75% stake in ISA's Group India business, and this is coming at almost 587 crore, with the deal coming at an EV sales ratio of almost 1.1 times, and on an EV EBITDA basis, it comes in at almost 6.2 times, and the deal is value accretive as per the analyst. And do remember that the target company deals with interior systems and component suppliers. And lastly, we'll have Minda Corp coming in focus. Yesterday, they invested, or they actually acquired 15.7% stake in Precall, almost 400 crore rupees, and they've labeled it as a financial investment. And an important business update would be coming today at 5 p.m.
We'll track that important business update at 5 p.m. and what the commentary from the management is, because the street is waiting with bated breath to understand whether the investment in Precall will stay limited to that 15.7%, or they're likely to do creeping acquisition from the open market, and which would perhaps trigger an open offer at one point of time. That's the key thing that the market wants to really understand from this so-called hostile takeover. But separately, also wanted to flag out what's happening with the insurance company, and wanted to put the spotlight on the exclusive that ET now got for you, wherein we understand from sources that there is a case to be made to increase the ceiling that was announced in the union budget. Now, after the budget, of course, all of these stocks had taken a big beating, but how's the risk reward really positioned? Let's understand that with Naresh Mirani as well. Naresh, from the entire life insurance and even other insurance and ancillary plays, is there any stock that makes for a good risk reward bet?
So it's a tough call to take it here, say, because they've gone through a very deep correction. And ever since, even before this, the price action was not great. So if you look at a HDFC Life, the stock listed and then went up to, say, closer to 600 rupees back in 2019. Even before this budget announcements, it was struggling at 600. So out here, it's a sector which I would like to avoid because the trends are not great, even X of the budget move. So it was coming close to a breakout, did not happen. So don't want to participate here unless there is a major trend change. Say the only leading one was SBI Life, which continues to do okay. But apart from that, I would still wait it out. Say if I have to go for something, I'd be watching out for ICICI Lombard, which has made multiple bottoms around 1100. If this can turn around maybe above 1160, 1170, this is the one I would go for, but only post the breakout.
Okay, let's move on. And the government, is clearly considering raising the 5 lakh rupees limit for taxing insurance premiums. In fact, ET now has learned from the finance ministry sources that deliberation is on the issue, going on with stakeholders. Anurag Shah, my colleague, joins in with more details.
In union budget, it was announced that if aggregate premium is more than 5 lakh per annum for traditional life insurance policy, then income from these life insurance policy would be taxable. Life insurance companies were not happy about this announcement. They have made representation to finance ministry. They have made representation to finance minister Nirmala Sitharaman also. And as per our sources from finance ministry, government is re-examining the limit of 5 lakh as there are the deliberations going on with all the stakeholders, as the industry has proposed to tweak the limit from 5 lakh to 10 lakh, but government is examining the impact of if they change the limit or they increase the limit from 5 lakh. So it will be a very big development related to the insurance sector, and we have seen that companies like HDFC Life, Max Life, SBI Life, LIC, they all were impacted. For HDFC Life, the total premium was around 10%, which was aggregate more than 5 lakh. So if the government tweaks this limit of 5 lakh and increases the threshold limit for more than 5 lakh, then it will be a big relief for insurance companies like HDFC Life. And as per our sources, there are the serious deliberations are going on to change this 5 lakh limit.
Thanks, Anurag, for that. But time now to slip into a very short break. But as we do that, we leave you the comments coming in from Netflix co-CEO Ted Sarandos. They are quite positive when it comes to India, calling it the fastest growing market and how they'll continue to invest in India as well.
We've had the best year of our existence in India. We grew engagement in India 30%. So our content watching grew by 30% last year in India. Our revenue grew by 25% in India. Again, wouldn't have happened if it wasn't tied to that engagement lift. So a lot of measurement, if you're trying to steer around subscriber number, and they make nice headlines, but they're not a real business metric. Does that, behind that subscriber number, is their engagement, is their revenue, is their profit? With Netflix, yes.
Tech guru Scott Galloway said that Netflix spends more on content than the defense budget of Sweden. And the truth is, it's actually more. You spend more than the defense budget of Sweden. It's at $17 billion
Yes, I was going
to
say, I don't know the defense budget of Sweden, but I know our content budget, and it is that. You're correct.
So how much of this, Ted, is for Netflix India? And what is the brief in terms of content? Because as you give cheaper options, as you have an ad-supported tier, you're going to have to sort of make the content more mass rather than premium. So what's the brief?
Look, I think the key is that as you start in the business, whenever we launched anywhere in the world, the first people who signed up for Netflix were probably very Western-centric in their taste, early adopters to technology, had wired broadband at home and a big screen TV and all that. And as you get more and more mass, you get more and more mix of folks, so you need a mix of price points. So over the years, we've added multiple price points, including we're rolling out an ad tier around the world. And the programming too then begins a little more in the mainstream. You don't abandon the other program, it's additive. This is all additive. And then as people move up and down in the way that they look at their programming and the taste, sometimes you find yourself watching something that you've never seen before or thought you would like, and you love it. We have an unscripted show from Korea right now called Physical 100 that people are watching all over the world. And this is, again, we've only been making original content in Korea for a few years and working across all forms of storytelling. The way that Indian Matchmaker is a very big hit in the United States, that you can make all those content work. So when I tell you that we're growing engagement and revenue in India, then the next part of that is that India gets a little bit bigger piece of the content budget. And so you basically are trying to constantly get just ahead of or just behind the growth in a market and figure out what's working and keep investing. So I would say that we are going to be investing more and more in India as we can continue to grow engagement and revenue in India.
Back with closing trades right here on ET now. Drifted even further lower. We're now down 100 points in the Nifty futures. 17,849 is where we're currently at. Cracks emerging for Britannia. Cipla is now sunk 6.5%. And it's banks which are really not supportive today. So Kotak is down 1.5%. SBI is down 1.5%. HDFC Bank is down today. And ICICI Bank as well is languishing. So these are the ones, along with Axis, of course, which is weighing heavy on the banking pack right now. Kunj Bansal as well joins in on the show. Kunj, hi, afternoon. A sideways market is what we have at our hands, I guess, after an attempt at 18K just last week. Wanted to understand whether you would be tempted to buy into the banking weakness or add positions to the current portfolio.
Yeah, so for buying or not buying, one will have to decide what is the view on the market. And this range bound movement of the market is not there for last 2-3 days. In the short term, now it's there for 4-5 months. The index has largely been in this 3% plus minus kind of range. And on a medium term, the same has been the case for last 18 months. So the large cap indices levels are same what they were 18 months ago. In between, of course, we had volatility November and December first week going to live high of Nifty on 18,800, and before that I think somewhere in June or so going to 15,200. But coming back, even in the last 4-5 months, the range has been very narrow. Now in such a range, if one has to continue to operate with a short-term outlook, which will be more of trading and not of investment, then yes, that is something that a lot of opportunities are indeed available on daily basis, on intra-week basis, on intra-month basis, subject to people knowing it and being able to analyze technical supports and breakout levels well, and using strict stop loss. Certainly, this kind of market offers good opportunity to medium-term investors who always feel whenever market runs out of a range, then they feel, okay, no, we missed out. The market is expensive. Indian market is always expensive. So this is the answer to the question, that is Indian market always expensive. In last 18 months, earnings have grown. On a conservative basis, they have easily grown in last 6 quarters at about 12-13%. Now that 12-13% hasn't been built into the valuation, because as I said, index is the same level. So you are getting the index at 12-13% cheaper level in terms of valuation. So yes, coming back, yes, for medium term investor, yes, there may still be a waiting time. There may not be immediate recovery, but it's a good time to invest.
You know, Kunj, deviating slightly, but wanted to get in your take on New Age Tech, because at the Global Business Summit, you had a lot of the top, speakers and veterans within this space say that there shouldn't be a trade-off between growth and profitability, owing to the fact that now a lot of these companies have started focusing a lot on profitability. Is this a space that you would relook?
So if I were to think of this whole space vis-a-vis the other spaces available to an investor in the listed market today, and mind you, we all know that we are talking of listed market today. In the listed market, given the subdued market in large cap indices, further subdued numbers in small and mid cap, which have clearly underperformed the large cap, and even sharper fall in the individual stock prices, which are down anywhere in the range of 30 to 50% from their highs in last 1 year, or from their levels about 4-5 months ago, and longer term track record of profitability. So if I take an example, it will be more clearer. Let's say consumer durable stocks, all these electronic equipment manufacturers, kitchen equipment, washing machines, refrigerator, these companies share prices are down 30 to 50% for the reasons that December quarter numbers, the top line growth was weak, bottom line was weak. Before that, even in December quarter, the festival season didn't go as expected, because we know that the consumption scenario, partly maybe due to inflation, partly due to other factors in India, is right now weak. Now, at the same time, these companies have strong brand. They have continued to remain profitable over the last so many years, anywhere in the range of easily 5 to 10 years, if not earlier. Of course, as I said, these last 2 quarters have been challenging. In between also, there have been periods of challenges when growth comes down. But compared to new age companies, they are nowhere in that range of loss making, and visibly likely to remain loss making, the new age companies. So now with these kind of correction, any smart money will look at these sectors which have corrected in terms of valuation, which will at some point of time start reporting growth numbers coming back in place. I won't be surprised if it happens as soon as March, or for air conditioner and fan kind of companies, if it happens in June quarter also. So for in new age companies, it will be left to the traders to continue to participate. I don't think medium term money is going to go into those companies.
And Kunal, some of it is already playing out, right? We saw that huge move on Paytm, for instance, after its numbers, which actually preceded the guidance in terms of, their outlook. Wanted to understand, where do you see the charts now after the massive recovery that some of these names have seen?
Yeah, I think post Paytm, if you've seen the pattern, that the selling has stopped for most of the new age stocks. So for example, Zomato, you've seen Nykaa, Policy Bazaar, Fino Payment Banks. I think when you look at the charts over the last 1 to 2 weeks, the selling intensity has stopped. These stocks, they have not participated on the downside. The volumes have been more inclined towards buying. These stocks are holding on to the long-term averages. For example, Paytm, I think is just about meandering at the 200 moving average, currently at 630 odd levels, and the 200 DMA is placed at 632. And given the kind of volume jump, it indicates that this is more of a minor mean reversion before the stock will probably restart an uptrend. Zomato also, I think, has been holding on above that 50 mark. 50, 52 was the previous, I think 54 was the previous swing high. The stock made a load back towards that 50 mark, but then it's now bouncing back towards that 53 levels back again. Even the likes of Nykaa, I think, has established a major support for itself. So I think the markets are now getting back into slight tilt of favor that possibly the selling into these new age companies have stopped. It's very difficult to now anticipate that which would be the set of stocks which could lead the charge. Now, whether it's the cohesive move where most of these stocks would probably move up in a very similar kind of a fashion, that's something very difficult to anticipate. But I think I would probably be bullish on the likes of Paytm, Nykaa as well as Zomato specifically.
Okay. Meantime, Naresh, let's get in your thoughts on Bharat Dynamics and even a KC International, both a buzz on the back of news. Naresh, you're on mute.
Bharat Dynamics has been sideways for the last 1 year. If you remove out the volatility, the stock topped out at 850, 880 in April of last year. And in between, it has been in a very range of 800 to 1000 rupees. But the trend is still up on a longer term basis. So the recent drift, which went lower, we saw a good recovery in the last 2 sessions. Today also it's doing well. A short term breakout happens once it can sustain above the 970 mark. So technically positive on the stock, dips to 850 to 870 continue to be a buying zone for Bharat Dynamics. KC, another stock which has been trending well on a longer term basis but consolidating in the near term. The stock is on verge of a longer term breakout. So if you look at the stock, it topped out at 450 in 2018, topped out at 530 over the last 1.5 years. And now we are in this range of 480 to 500 as of now. So if it can sustain above that 530 mark, that would be a longer term breakout, which should happen in it eventually. So that's a buy at current levels. Looks more interesting at current prices.
Okay, that's the take coming in on some of these buzzing names right now. Kunj, wondering whether on an overall basis, where is it that your positive as well as negative biases are sectorally?
Yeah, sure. So for that, obviously, as we have discussed, that one has to take a kind of a view on the market. One can, of course, always go wrong in the short term and medium term. And the other analytical support will come from the recent quarterly numbers that have just gone by and the expectation of the quarter numbers to come in. Now, if I put together these things, so two sectors have reported, despite the overall subdued result season that we have seen in December quarter, two sectors have reported reasonably good numbers. One is the banking, the other is the capital goods. And that has been seen in the case of some of the companies' stock prices also from these sectors, which despite again subdued market have been rewarded well. So these are the two sectors I think will continue to do well also for banking, given the way the credit growth is there in the range of 14 to 16% currently. In fact, a sharp gap has come in the credit deposit ratios for the bank. There is a talk of banks continuing to increase deposit rates to attract more and more deposits. And there have been improvement on other parameters of asset quality and interest margins also. The same is likely to extend into March quarter. So we will continue to see interest coming in or an outperformance coming in that. Capital goods also we have seen, given the way the order books have been building up and they have been continuing to go up. Along with that, the efficient companies have been increasing their execution levels. So the top line has gone up. Bottom line hasn't gone up as much because of the commodity pressures, which is likely to ease. And if that happens, then we will see the March quarter numbers also doing well. Of course, the way the share prices have moved up for capital goods companies, their valuation always tends to come into that, is it comfortable zone kind of a space. So maybe in any correction of the market when it comes, that's where the investment money can be invested in.
Okay, time to get in some BTST trades as well before we wind up for the day. Kunal, what's on your list?
So I'll suggest a couple of large cap names. Tata Motors is something which I would recommend as a buy. Looks attractive. The stock forming a base, not closing the gap which was recently built for Tata Motors. So that's a buy. Targets of 480 positionally, stop loss at 420. And Tech Mahindra, a stock which I had found its mojo back, I think last week, showing very strong uptrend and then not succumbing to any major kind of a correction also looks very attractive. So would suggest a buy 1200 as a target and stop losses revised to 1115 for Tech Mahindra.
All right, what about you, Naresh?
So auto is the space where the relative strength is there. It looks interesting. So first is a buy on Tata Motors with the stop loss at 438 and a target price of 455. Second is a buy on Bosch Limited. The stock is making a big cup and handle breakout at a new 52-week high today. A stop loss at 18,000 and a target price of 18,700 for BTS.
All right, fair enough. That's the view coming in, some top recommendations and calls from our chartists. Meantime, Naresh, is there anything that's looking interesting within the IT basket?
So in terms of IT, now every stock is making a different move. So you have a Persistent at an all-time high. You have a Sonata Software making a 52-week high. And then you have a lot of stocks struggling. But overall, the bias has become positive. So one has to be stock specific here. So a bounce back trade is Wipro, where the stock has done nothing for a long period of time and also corrected the most in the large cap. Second is Tech Mahindra, which looks promising. So that would be the second one. And then there is LTI Mindtree, which looks promising for a move towards 5200. So positive on a few stocks, not as positive on TCS Infosys, given that they've already made a strong move. But a basket of mid cap and some large cap stocks look interesting in the space.
Okay. Kunj, what's your outlook within the entire, high beta pockets like infrastructure as well as real estate? Do you believe that with the kind of impetus that we're seeing on growth, on the infrastructure activity picking up, a lot of the managements as well saying that execution has improved, a lot of the bottlenecks have now eased, that this is a space that can be looked at for the long term?
So when we talk of infrastructure, in terms of listed space available opportunity to us in India, one can probably break it up into very few specific pockets. So on one side, you will have one large conglomerate infra company. Then you will largely have the road EPC along with that little bit of irrigation and some civil work oriented companies available to invest. And if within that broader infra we want to include, then we will have the manufacturing capital good companies included. Now, it's obviously well-known fact that government has been spending a lot of money on infrastructure, and when we say infrastructure, certainly on the building up of roads and highways, and that's clearly visible in the order book release in terms of number of projects, in terms of the business gained by the companies. Now, unfortunately, that doesn't reflect in consistency of share price performance of these road EPC, civil construction kind of companies. So that is a challenge for me. That how do I handle this dichotomy? On one hand, businesses seemingly are doing well, order books are building up, there is a continuous support in terms of spending by government, that is spending not on roads and highways, but in general on infrastructure or on capacity expansion has now been supported by private sector as well. But that's not reflecting, as I said, in the consistency of. So that leaves the third space, which, as I said, is capital good companies. That is certainly doing well in terms of the quarterly numbers, in terms of consistency of financials, reflecting in the consistency of their share price returns as well. That is a space I think that will continue to do well. Of course, the valuation have become expensive because the share prices have moved up in the recent past, including as recent as last 1 week to 2 week. So any correction in the market or in the prices of companies of this sector, capital goods sector, will be a better opportunity to enter.
Right. Kunal, any bottom-up plays when it comes to cap goods? I know we are fixated about only L&T, but of course there's a larger universe than that.
Yeah, I think Siemens is also attractive. That stock has been trading up with a very strong breakout for itself. In fact, if I'm not wrong, the last 1 month specifically, post that move where L&T matured itself into 2,300 and then corrected, I think Siemens is the one which has actually led the baton ahead. The stock has confirmed breakouts of two important patterns. One was a swing breakout about the 2,950 mark, and then the 3,000 breakout, which is a multi-month high for Siemens. So both these levels been taken out. The average volumes on both the occasions of breakout for Siemens have been quite attractive. So I think other than L&T, which of course is the preferred bet, Siemens is the other stock which I'll be bullish on.
Okay, meantime, some of the other stocks that have been in the spotlight today include Hindustan Zinc, the latest being that they are going to place the government letter before the board Do remember you had the government opposing the move of Hindustan Zinc buying Vedanta's global zinc assets. That's keeping the stock rather tempered in today's trading session. And then, of course, you did have a lot of the FTSE changes that have been included in the indexes. So the likes of ACC, Shriram Finance, Trent, Tube, Yes Bank, etc. Indian hotels all being included into the large cap index. Within the small cap index, names like All Cargo Logistics, RHI, Magnesita, Sapphire Foods as well. Those have been some of the interesting names that have been added. So all of these are in the spotlight in today's trading session. Naresh, let's get in your take then on the charts. Any of these names that you're tracking, an All Cargo as well as a Sapphire Foods or a Triveni Turbine?
So out of these names, Triveni Turbine is what I track because it's something which is in the capital goods segment relatively, and the stock is very close to a breakout. So over the last 4 months, it has made 6 to 8 tops around that 300, 305 levels. Today also the stock is very close to those. If it can sustain above those levels, it could be a 15% move from here on in the short term. The trend is pretty strong, heavy, and this is highly institutionally held stock. So looks interesting at current levels. Expecting a breakout going forward in this one.
All right. Meantime, Kunj, what's your sense when it comes to the entire, the entire hospitality space as a whole? Because we have seen the overall, we have seen prices soar for a lot of these companies. The management sounding very confident, and room rates as well have been on the rise.
All these improvements are indeed visible in the quarterly numbers of these companies for last 2 or 3 quarters. As a result, in case of some of the companies, the market has rewarded them by giving returns to their share prices. In some cases, it's still not as much reflective. Coming to the business, looks like the way the demand is there, the travel is there, the business will continue to do well in terms of room occupancy, and a higher room occupancy will obviously give the pricing power to the companies to increase the room rates, resulting into an increase in overall revenue. How they manage their cost line is something that we will have to see, because on one side we have inflation, which has been high for prices have been high for anything and everything, including the e-tables, including some of the services and things like that. So profitability is something that will have to be monitored. Unfortunately, the consistency in return for the whole sector as a whole always remains missing. So it's some point of time some companies do well, and other points of time other companies do well, and as a result, it becomes very difficult as an investor to take that one straight confident call. I think that is something that as a confusion will continue for the sector, although the financials are likely to improve.
Okay, fair enough. Let's wind down the markets then. Just about a minute and a half to go before we wrap up what has been a fairly abysmal start to the week and a fresh trading day. You've got the index, which is hovering around the 17,850 mark now in today's trading session, as we've come off from the 18K mark quite significantly that we witnessed last week. The Sensex down nearly 300 points in trade, and the broader markets, well, listless at best. In terms of the individual sector performances, PSU banks taking a beating, energy, the Nifty bank index down 1%, metals, pharma, pretty much all your sectors down and out, barring IT, up 0.5%, and auto, albeit a very small gain. Take you through the big losers then, and heavyweights have had it rough. Adani Enterprises at the top of the heap. Cipla is down 6% in trade. Britannia, BPCL, something like Maruti, HDFC, you've got ONGC, Reliance Industries as well, all seeing pressure in today's trading session. Within the gaining side, then you've got Divi's Laboratories, which gains traction, Ultratech Cement, Power Grid, Infi, HCL Technologies, some of the smart movers. Take you through the newsmakers then, and Cipla clearly feeling the heat in today's trading session, largely on the back of that US FDA issuing key observations in one of their factories. You've also got a Hindustan Zinc. They're going to place the government letter now before the board. A lot of stocks within the semi-annual review for FTSE have been in the spotlight. APL, Apollo, Patanjali, Vedant Fashions all being added. Samvardhan Motherson has acquired about 100% stake of SAS Auto System Technic. NMDC Steel, by the way, made its debut today on D Street. 30.2 was the listing price. You also had Dilip Bilkon, it's been an order win. Bharat Dynamics, an export order worth $255 million. Lumax Auto on the IAC International Automotive deal that the company has bagged. KC International has seen some orders and that's also kept the stock abuzz in trade. Within the broader markets, here are some of the other winners. Sera, Sonata Software, something like a Star Health has rallied very smartly towards the fag end of the trading day. You've also had Coforge, IDBI Bank, Persistent, Shree Cements, yet again on the upside, while on the flip side, Shilpa Medicare, Adani Group of stocks, KRBL and Spark lose out. Well, that's pretty much all the time we have on this edition of Closing Trades. We'll wind it down on the show. Coming up next is Your Trades.